Is the stock market no longer a game for the modern day punter? Now, how's this for a stat? 90% of all stock traders fail to make money trading. That's wild, isn't it? To break that down even further, 80% of traders lose money. They actually go backwards and end up in a worse position, whilst 10% of these traders actually just break even. And then we're left with the other 10% of people who actually make money trading. Isn't that wild? Just 10% of people make money trading. So let's talk about why so many people fail. Let's discuss why there are too many cowboy traders and how the stock market has actually become rigged. Now, before I do get started, I must say that I've earned some decent money trading stocks back in 2003 up until about 2007. And after that, I bailed on the stock market, and for good reason, which is what you'll find out about in this video. But it's not all doom and gloom. Sure, I'll tell you why trading the market is rigged, but towards the end of the video, I'm going to share with you a strategy that can allow you to prevent being played or lassoed by these cowboy investors and instead have you earning more money in the stock market, but also with less work and less stress. Now, if you don't want to get taken advantage of in the stock market, please smash that like button. So we can also get more people obviously understanding how to avoid being a part of that 90% who fail, right? We're gonna get more people watching this video if you smash that like button. First up, we have Donald Trump's favorite 2 words. That is fake news. Yes, fake news. It's crazy. Even more so now that we have big influencers with massive brands and massive herd-like followings that live and breathe what their favorite influencer of the day tells them to do. For example, when someone talks about Tesla stock, Walmart, Amazon, or any of the other big names, people go into a buying and selling frenzy. But have you ever stopped to wonder if this news isn't just being pushed by influencers, but maybe the very companies themselves? I mean, if I own Tesla and I wanted the price to go up, of course I'm going to want to put out great news. But who's to say that the news is true? Or, and this is even worse, is a competitor who doesn't like Tesla may want them to struggle, and they can hire an investigator or dig up some dirt on Tesla or falsify some information that may or may not be true and have that put out as news, right? Spread that far and wide into the accounts of many influencers who love to breed fear-mongering news about this stock or that stock, it's dying, it's crashing, look out, we need to be careful. So that's reason number 1 why the stock market's gnarly. Number 2 is bear rating. Yes, some people love a good bear run. People back in 2007 to 2009 became gazillionaires with good bear rating tactics. But what exactly is a bear rating tactic? This is where large players, sometimes people call them whales, will place a huge sell order that causes the market price to drop, which also causes other people to, their stop losses to trigger, thus creating a huge selling frenzy, dropping the price of that stock even more. And at times, you don't need to be a whale for this to happen. Maybe people get a few of their dolphin friends who have deep pockets too and all short a particular stock, which manipulates the market to catch on, forcing a crazy bear run, and you and your buddies, or they and their buddies, become handsomely rich. And this is why the stock market is rigged. So many people can do this, and they do this, and it's just wrecks so many people's investment portfolios. It's disgusting. Next, we have the all-famous pump and dump. This is the popular one where a bunch of influencers or media moguls may decide to rally around one stock and breed a cluster of hype and news around it and pump up the price of that stock that they already hold. And they push that news, causing widespread FOMO, okay? FOMO, if you've been living under a rock, stands for fear of missing out. And they create this FOMO in those who want a piece of the next big thing. right? And they do this to manipulate them into buying that stock of the day, allowing those influencers or whales or media moguls or whoever's doing this to call them to hit a healthy high in the market. And once that stock rises to a good high, these people bail and dump out, leaving the stock and leaving those FOMO buyers to lick their wounds. Now I'm telling you, it's a brutal but common strategy that those who don't care about humanity play. Too many people have lost big on these types of pump and dump approaches that, let's be honest, are just so hard to even know if it's really a good deal or not. I mean, sometimes other influencers get on the back of these pump and dumps and don't even know they're being played by a bigger fish. They just genuinely believe that it's the deal of the day and everyone else should be on it as well. So it's so hard for us to know. Next up, we have spoofing. As you can see, yes, large whales can move markets with pump and dumps, bear rating tactics and fake news, which is why the stock market is rigged, but also people that aren't large players can rig the game too. And that is where spoofing comes into it, and even high frequency trading. Firstly, let's stick with market spoofing. This is where someone will put in a large buy or sell order. And when other investors see such a large order, they get tricked into thinking that a whale is about to enter the market. Ding, 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 alarm bells ring. And so us being smart cookies, right, or you being a smart cookie, you want to get in on a trend that's about to happen. A whale's moving in. Because if we follow suit with a whale, we'll end up having a large win as well. However, seconds before the market trades at that price of the large order, the phony whale will pull that order out, right? And they won't execute that order, they'll cancel it, thus causing the other investors who have that type of order on place to have that order executed. And people do this to manipulate people to making trades on stocks that they already hold, so they can benefit from the trades others make, which can cause the market prices to move in a direction where the manipulator actually wants them. Now, isn't that a black hat tactic that nobody wants to be a part of? I mean, these people ought to have some bad karma coming their way, right? And lastly, the fifth reason why the stock market is rigged is high frequency trading with algorithms. I mean, let me at least start by saying, come on guys, algorithms, really? How the hell is a human going to be able to beat a computer and an algorithm? Anyhow, let's see why this sucks for us all. High frequency trading basically means that people have built, and they have been around for many years now, computers that are set up with algorithms to perform highly frequent trades, meaning, well, yeah, a shit ton of trades within a short period of time, right? And these things move big money into and out of stocks within minutes, maybe even down to even the second for the more advanced algorithms that are out there. Meaning you have computers trading for people and we just can't beat them. This is the main reason I left the stock market, because I just knew that these computers are always going to be far ahead of me. I mean, I can't compete. They're gonna win. So now you can see why 90% of people, and the keyword 90% of people fail at this, fail at making money by day trading. But the big question is, and this is what I was telling you about at the start of the video, the big question is, how do we get around all of this? How do we prevent ourselves from getting brought into hype and all this sort of stuff? How do we invest in the stock market without getting tricked, fooled, manipulated, and persuaded by influencers and the ever elusive FOMO? Step number one, know the true value of the stock before you buy it. What does this mean? Well, if you know how valuable a stock is, whether it's overpriced or underpriced, it doesn't matter what media or influencer is telling you to do, or trying to game something or time the market right, or if you see a whale trying to move in, or if you see somebody who's trying to create these shady tactics, or you think it may not even be a shady tactic, you think it might be a big move is actually going to happen. It doesn't matter what is happening externally. internally, if you understand the value of the stock yourself, you don't need to look at outside influence. You don't need to be persuaded by anything else other than you knowing the cold hard facts of knowing the true value of the stock before you purchase it. Now, obviously Benjamin Graham and Warren Buffett are famous for talking about value investing. If you don't know about that, go away and research. You can buy some books on it, but knowing the value of the stock is going to allow you to stop being manipulated by outside forces who are trying to persuade you to buy, sell, hold, or do whatever is right for the market at that particular time. Now, step number 2 trumps all others, and this is being a long-term investor. You see, when you move from trying to time the market right and make multiple trades and be on the computer at stupid o'clock, you let the market work for you instead of you having to work for the market. So I suggest stop trading and start investing. Don't be a trader, be an investor. Take the long-term approach of buying and holding. And when you set a long-term game plan, you don't need to be on your computer at stupid o'clock. You don't need to be open to checking fake news every day. You don't need to be able to compete with unbeatable algorithms. And lastly, the stress. You don't need to buy into the stress and ride the bumps, right? Being an investor and holding for the long term, not only is it far less stressful, but you'll be rewarded for playing the long game when so many of the others just can't, right? Play the long game. Or if you are day trading because you want passive income, quit that. Possibly quit that and come and buy an online business with me. That is, buy a business that's making consistent passive income every month. Just Google, you don't have to do it, but just go away and Google website brokers and have a look at the business of the sale. You'll see that you can get a 20 to 30% return on investment without having to work stupid hours for it. Online businesses, in my opinion, are far more passive than trading. And I've actually done videos on it, so you can go away and check it out here or on the link or somewhere on my channel. YouTube watcher, what's up? It's Jaryd Krause here. And if you've watched this video up until now, please smash the like button. I'd love to be able to get this video in front of more people to understand a little bit more about the market and some of the shady things that are going on in the stock market and the alternatives as well. Also, thank you so much for watching. I really do hope you're doing well. And I also want to ask you, please possibly consider subscribing. No, but seriously, consider subscribing because my exploration on YouTube is about to explode. Stories, polls, more amazing content, more surprise, delight, more epic value is on the way. So now is the time to subscribe, and I hope you consider it at least, and I hope to see you on the next video. Thanks. Hey YouTube watcher, if you thought that video was good, you should check out this video here on the 2 best types of websites beginners should buy. Or check out my playlist on how I made my first 100K from buying websites and how to do due diligence. Check it out. It's an awesome playlist. You'll enjoy it.